Have you ever wondered what is the main difference between a trader that is profitable and one that is not? Well, the main difference is that a profitable trader has a mechanical entry model which he can refer to every single time over and over again. All he needs to do is use his entry model to understand, can I enter the position, yes or no? Now, most traders who are not profitable understand exactly how to analyze a chart. They understand, okay, the market is ready to go up or down, but they don't actually understand if they are ready to enter a position or not. Today's video is going to help you understand when to enter a position. So make sure to leave a like. If you have any questions, make sure to leave a comment in the comment section down below. Make sure to join the free Discord, link in the description of the video, and let's dive straight in. Welcome to the daily time frame here on pound dollar, and we're here analyzing March 2022. So what I'm going to do in this video is I'm going to run you through the chart on pound dollar here on the daily time frame. We're only going to be executing the trades on the daily time frame here, and if you just use the 4 confluences which I'm going to be explaining in today's video, you will be able to be a profitable trader from literally tomorrow onwards. So what I want you to do is I want you to write down the confluences here on the right top, and we're just going to go through them one by one. So the very first one is going to be MS, also known as market structure. So when we have market structure, we look at 2 forms of market structure, okay? So we look at swing structure and we look at fractal structure. Swing structure is the overall market structure when we zoom out. So what we can clearly see is that the market is trending in towards the downside. We have lower highs and we have lower lows. So overall, we understand that we're looking for a new lower high to trade pound dollar further in towards the downside. Now, if we look at the fractal structure is a little bit more complicated, or at least people find it a little bit more complicated because it is the structure on the individual candlesticks. So when I talk about the structure on the individual candlesticks, all we're simply doing is that we're identifying the market trend based on candlesticks themselves. So what we can identify here is, for example, that we had a low, we had a lower high, we had a low, we had a lower high, we had a lower low, then we had a high, then we had a higher low, and then we had a higher high. And now once again, we have a lower low. So overall, if we just focus on the most recent price action, we can very clearly see over here that we had a high break. Then this was the low that broke that high, but now the low is broken once again. Therefore, this is now your most recent high, and this is now your most recent low. So again, if we go back into towards the confluences, we understand, okay, we have market structure, swing structure is looking bearish, fractal structure is looking bearish as well. If we just quickly want to showcase you the overall swing structure, here we can see we had a break of structure, here we can see we had a break of structure, and once again here as well, we had a break of structure. Now this over here is my overall swing high, and this over here is my overall swing low. So therefore we understand this is your high, this is your low, and this is your high, and this is your low as well. Therefore, swing is bearish and your fractal structure is bearish as well. And therefore, it only makes sense to look for a potential short position. Now, the second piece of confluence is going to be liquidity. So liquidity is very easy to explain. All you're simply going to be looking for is a liquidity high. So when we identify liquidity, there are different forms of liquidity. I've talked about them many times in all of my videos, but what you need to understand is that we have 3 different forms, okay? So form number 1 is range liquidity, form number 2 is trendline liquidity, and form number 3 is swing high and swing low. So in this particular chart over here, we have different forms of liquidity. I would say above these highs over here, we have range liquidity. I would identify this as a range, and above the highest high there, that is where liquidity lies. And we also have swing high liquidity in the form of above this high over here, above this high over here, and above this high over here. So in this particular example, we can see that we grab liquidity above this specific high over here. And an easier way to understand that this is a swing high liquidity is to understand that this is the overall impulse down. And when we have an overall impulse down and you have these little bumps in the road, as for example over here, and with bump in the road, I just mean like a minor pullback, that is also where liquidity will lie. So we have liquidity in this particular example grabbed, and therefore we understand that we can also again understand that the market is ready to push down lower once again. Now, if we go into confluence point number 3, we want to look for supply and demand. So when we look at supply and demand, we again go into the chart, and what you're simply going to be looking for is something called a buy before a sell or a sell before a buy. Now, a buy before a sell is always going to be your supply zone. As we can see over here, this is the buy up before the sell down. that broke market structure. Therefore, once we come back into it, we see a reaction down. Now, to confirm that this area of supply is actually valid and ready to push the market down lower, we confirm that this is a strong supply zone by looking for a market structure shift, as we have had over here. So here we can see that we come in towards that supply zone, then we get that bearish market structure shift, also known as your fractal structure, which I talked about earlier. And at that point onwards, we then understand that the market is ready to push down lower. Next, if you don't have a buy before a sell or a sell before a buy, well, obviously we have a buy before a sell over here, but it's a pretty big zone. You can refine it by using this indicator called the 50% body candle. Load in the indicator and then look for the white candlestick, which caused, again, a break of market structure as we had over here. That is then going to be your most recent area of supply, and as you can see, it aligns beautifully with the fractal high. Now, what you want to do is you want to draw the zone from wick to wick and understand that that can potentially push the market down lower. Now, the final piece of confluence is going to be your PVD. And PVD is, very simply said, premium versus discount. Now, this is not a must confluence, because most traders, what they do is that they draw in the Fibonacci retracement tool, and then they look for at least a 618 fib retracement into where? Well, in towards, let's say, this area of supply, or in towards this key level of support and resistance. However, what you need to understand as a trader is that sometimes the market is extremely bearish and it won't even retrace all the way back up in towards that 618. Now, how can you understand that the market will not retrace all the way back up in towards that 618? Well, that is looking for 1, a different area of supply, and then 2, a market structure shift in towards the downside after grabbing liquidity, such as we had over here. So therefore, I understand that the market can already sell off from this area of supply, and I'm therefore happy to take the risk that it can. So what I do is I enter on top of that area of supply with my stop loss above the protected fractal high, and we target a new lower low for at least a 1 to 3 risk to reward. We enter the position here on the daily time frame, and as you can see, we hit RTP. Now, this is very simply said how you can trade one single time frame in a mechanical way using market structure, liquidity, and supply and demand mainly. And obviously, if you want to add in the confluence, you can also use that PVD tool. So if you have any questions, make sure to let me know in the comment section down below. I hope you enjoyed this video, and if you have any questions, I hope to see you inside Discord. Link in the description of the video. Thanks, guys.